As we're approaching this second cycle of Dogecoin, what we're looking for is to establish a higher high so that we can have a higher low. We know now that Dogecoin's floor as of the last cycle is roughly around 16 cents. That's what Dogecoin looks like after institutional money is pulled out and also after the paper hands have sold. We're at about 16 cents. Welcome back, YouTube. I've been getting a lot of questions about Dogecoin's price action and AMC's price action. I'm going to answer both of them in this video. I'm going to start with Dogecoin and then transition into AMC. So as far as for Dogecoin, I know we've been seeing a recent rally and we've doubled from our low of around 16 cents, and we've also had some pullback. And I've seen a lot of questions as far as comments saying people, oh, their paper hands are selling. And not necessarily. If you remember some of my older videos when I said that as far as anything under 20 cents would be a great buy as far as that historical range, and that you have the potential to get a lot of gains even in the short term. If you're looking to trade or even if you're holding, it's better for you to average down now closer to our all-time low, well, closer to our floor right here. And what's going to happen is similar to that range between 16 and 20 cents. I said that we're going to see this periodically where traders are going to take profit because they average down. You can believe that. 16 to 32 is roughly around 100% profit. So even as the stocks that I trade, I like 100, 150% profit. That is golden for me. Like, I try not to get greedy so that I'm not like left holding the bag or holding a position longer than I want to. So that's going to be like a great range. So I expect to see that some sell off around like the 32 cents range and probably 32 to 35 cents range. That's really normal as far as for this position. I wouldn't get worried about Dogecoin unless the entire crypto market is going upward and we see institutional money pull out of Dogecoin like single-handedly, and we have a harsh correction in Dogecoin while the market is trending the other way. As we're approaching this second cycle of Dogecoin, what we're looking for is to establish a higher high so that we can have a higher low. We know now that Dogecoin's floor as of the last cycle is roughly around 16 cents. That's what Dogecoin looks like after institutional money is pulled out and also after the paper hands have sold. We're at about 16 cents. So some key indicators that we're going to be looking for now is to break that 72 cents range on this uptrend and also have a higher floor for the correction period. Historically, as the higher the high, which pretty much just means that the needle is moving, then that correction range also moves up as well. So what we know now is exactly what Dogecoin looks like without the institutional money and without the paper hand. So now we're looking as the coin pushes up, people will establish new floors, and they'll have, in the long-term holders will increase positions at certain levels. And hopefully, you know, if I do my job correctly, people will be more educated as far as the cycle, so there'll be less panic, and we'll be able to establish some higher floors and ultimately move the coin forward. You can see this pattern with any coin historically. You'll see as the coin trends upward, the higher the high, you'll have the floor will move up with it ultimately. And you know, crypto is very volatile, again, that 80 to 85% range, but historically it stays within that. So as you move up, we should see a higher floor from the 16 cents. I'm working on part 3 of my video as far as for the wealth chart that I created. So I'm going to dive deeper into this as far as cycles and being able to indicate which one. So I'm not going to transition into that in this video because it'll make it a lot longer, but that'll be released sometime this week. Dogecoin is fine. These pullbacks are normal. People are going to take profits. We're probably going to see this 10 more times during this cycle. So this is completely normal. Just prepare for it. It doesn't indicate anything as far as for the anything harsh or threatening to Dogecoin. And again, also the first thing you want to do is just check the overall market, because as of right now, the market moves in sync. AMC, wow, they have really been struggling this week. We've hit 0 shares available to borrow several times this week. Short interest is rising. This is absolutely amazing that we're in with the time that we're in right now. They're under a lot of pressure. When we can see that they couldn't drop it below into the deep 20s like I'm assuming that they wanted to. A lot of indicators pointed to that that AMC was going to pretty much take that dip into the 20s, but the buying pressure just pretty much became overwhelming, and we rebounded very hard off of like that $29 floor, which was really impressive because I actually thought we were going to go to about 25. I've been getting a lot of questions as far as for like the institutions buying into AMC and whether or not that's a good thing. Ultimately, them buying into AMC is not a good position for hedge funds that are shorting it because that's ultimately less shares. Now, are they going to allow them those shares to be borrowed? I'm sure of it. Why not? You can make money on the back end, and then of course, after the squeeze or any type of price fluctuations, you can capitalize on that as well. But ultimately, them increasing the positions is not necessarily a great thing because, again, worst case scenario, this drags out to the through another quarter, and then we have institutional positions that have increased, 200%, and supposedly it goes from like 144 to like 200 something million shares for institution, and we're still holding 80+%. Then obviously we have some synthetic shares there. So again, the institutions increasing their positions is not necessarily a good thing, but in the short term, they're probably going to allow those shares to be borrowed. The most important thing is that the available shares to borrow is fluctuating pretty much really low, and that's going to just cause a rise on the interest rate as far as for them being able to borrow, which is really great because that's putting pressure on them from multiple angles. We have a lot of the regulation that's coming out. We know based off of the wording and a lot of the legislation that the SEC is investigating. So we know that this is enclosing on a lot of different areas, but we also know that the people are pretty much averaging down and they're still holding no matter what price point that it goes. So I still stand by the fact that they're going to raise the stock to pretty much get some more shares on the market, because as of right now, the shares are running low, and when they're low like that, they pretty much have to capitalize off of the shares that are sold into the market, which are the ones that we sell. So if we're not selling low, then the next strategy would be for us to sell high. I'm a firm believer that this is going to go to like the 3-digit range and get some people to offload, because it's part of the strategy is to get people so sick of red and to pretty much keep us down here for so long that when you finally turn back green, or if you see a percentage drop and you start seeing it tank the other way, that's going to get you to give in and to sell. What I want to see personally is whether or not we're going to close above $40 on Friday. I still believe that we're going to have a gamma first before the short squeeze, but we're seeing a lot of resistance right now around like the $37, $38 range, and that's for good reason. I'm going to pull the numbers, but I can't remember off the top of my head how many contracts are for the $40 range, or that would put some contracts even at the 45 like in the money. But we're seeing a lot of resistance here in this range, and that is for a very good reason, because once we start triggering gammas, once you start triggering like those options, you pretty much have like a domino effect. So we're going to see some resistance here before we can break that $40 window. My opinion, I'm not panicked at all. I've still been buying even as this has trended downward. At this point, I believe that this is inevitable, and they've ultimately dragged this out and made this and ballooned this into a lot bigger than what it had to be, which is better for the people holding. But I don't believe that there's a way out of this, no matter how long they drag this out or how long the SEC refuses to take action. I don't believe there's a way out of this. So I believe that this is pretty much inevitable at this point. As far as the momentum we've seen over the last few days, very bullish trend. We haven't seen this in months as far as for the consecutive green days. This is a very bullish indicator, and I'm sure they're well aware of that. Again, when we start running out of shares to short, we'll probably start seeing some increase in dark pools, but when they have no shares, that is a really good sign, especially like we have days like when there's really low volume and you have outflow beating inflow, but the price is still remaining stagnant. That is a really great indicator. So, normally that's an indicator that the brokers are probably delaying the buys, but in itself, we're still holding strong despite the manipulation that's going on. So these are really strong indicators. And as far as like the floors, because just remember, even though they got it down to $29, if they can get this thing down to 50 cents, they would. If they can get it down to $5, they would. But the lower it gets, the buying pressure pretty much just becomes overwhelming at that point, and they just have to spend an absolute fortune to get it down. Just imagine like a spring. When you start compressing it, the closer you get to the floor, the harder you have to press. And for them, that's the more money that they have to spend, or the more shares that they have to come up with. And as you can see, even now in the 30s, they're battling to even find shares. We're approaching 100% utilization. We're over 100 million shares borrowed, so we're in a great position. Time is on our side, not theirs. I'm still holding, in my opinion. If you're above the current price right now, definitely averaging down would be a great strategy. moving forward. I do expect August to be a great month. I do believe we're going to break that $40 window. I can't predict when we'll hit that that three-figure mark, but I do believe that's happening. Obviously, the hedge funds are in complete control of this, so hopefully we'll get some regulation next week or the week after from the SEC. We'll see if anything is being enforced or whether or not the hedge funds will take it seriously. We'll see, but I do believe that August is going to be a great month, and it's already proving to do so. That's my update for Dogecoin and AMC. Again, I'll be releasing the wealth flow chart and going deeper into part 3 this week. I appreciate all of you. All of my links as far as for social media are in the description section, so feel free to follow me on Twitter and Instagram, or join the email list. I appreciate all of you. Thank you. And don't forget to like and subscribe as well, because we're definitely growing. We're approaching the 40,000 mark, so I appreciate all of you for that. But thank you all. I appreciate you, and until next time.